And welcome to Business Incorporated live on Channels Television. Yes, the first full trading week of October, that's winding down, but here are the stories you should be looking at. A major shift is underway at the heart of Africa's financial markets. The Johannesburg Stock Exchange is ushering in a new era. Valdine Reddy steps in as CEO as Leila Furi prepares to retire. And Brussels goes big. The EU is pledging 400 billion euros under its Global Gateway initiative to deepen investments across energy, infrastructure, and strategic sectors in the global south. And Congo goes for gold. The DRC Central Bank is building up its gold reserves amid soaring prices. And it's great to have you join us. Let's get a check now what's playing out with the metals market. No, that's starting with oil now, with the commodities. We've seen oil prices, they fell after Israel and Hamas agreed to the first phase of a plan to end the war in Gaza, weighing on oil's war risk premium and, pushing investors, to sell there. $65.87 a barrel. That's trade for Brent this afternoon, 0.57% down. WTI crude managing to come back above that $60 level, $62.14, down a bigger 0.66% there. Let's get a check now on metals. We see the metals market there, even though we've seen some pullbacks, but U.S. gold, that's still holding up at over $4,000 by $55. Spot silver, that's looking even better. Now, I guess to break $50, that's next for spot silver, with gold sitting above $4,000. Platinum, $1,700 per ounce, 0.25%. So the rally continues right there with the metals market. Palladium, a bigger 2.75% rise, $1,522 per ounce. So it's still a green picture right there with the metals market. Meanwhile, see the Democratic Republic of Congo, that's DRC, has announced a bold new monetary move. Its central bank will begin building gold reserves, leveraging soaring global prices as an anchor for greater economic stability. With gold prices recently surpassing $4,000 per ounce, Congo, among Africa's prominent gold producers, has until now held little in the way of official gold reserves. Governor Andre Wameso pointed earlier this year, says the gold reserves will be established alongside traditional hard currency reserves, aiming to reinforce the Congolese franc and strengthen monetary policy. We see Africa's largest stock exchange is turning the page. The Johannesburg Stock Exchange has announced Valdine Reddy as its new CEO, succeeding Leila Furi, who will retire after a strong tenure. The leadership shakeup comes after efforts to modernize operations, expand regional influence, and adapt to shifting market dynamics. We'll see if the exchange actually reacts to that. Then the European Union is doubling down on its strategic ambitions for the global south, pledging to mobilize 400 billion euros in new investments by 2027 under its Global Gateway initiative. That was announced today by President Ursula von der Leyen. The scale-up comes as the EU seeks to counter rising global competition and strengthen ties in energy, transport, education, and critical minerals. That's for the European Union. Then moving on to Ghana now. Ghana is stepping up its digital game. The London Internet Exchange Links has launched Links Accra, a new neutral internet exchange point, a digital realities carrier neutral facility with the aim of boosting connectivity across West Africa. The new setup promises lower latency, reduced data transit costs, and stronger local internet performance as traffic that once routed overseas can now stay within the region. All right, so our first conversation now, as Thanksgiving approaches in the United States and Nigeria enters its festive season, the cost of celebration, that's rising. Price of a whole turkey in Nigeria has jumped 12.5% year on year, now selling for around 90,000 naira, up from 80,000 naira last year. This comes even as overall food inflation has shown signs of easing. Let's talk to Toju Megison, analyst at financial derivatives company. Great to have you, Toju. So despite easing food inflation, lower feed costs from maize and sorghum, turkey prices continue to climb. What's the disconnect here?
Good afternoon, Lee. Thanks for having me. So as you already highlighted, food inflation has been easing more recently to 21.87%. This is as a result of a decline in the prices of the key staples in the food inflation basket. Now, with respect to the turkey prices, we've seen turkey prices actually climb up year on year by 12.5%. So this is as a result, this could be due to supply chain disruption and importation costs amid fluctuating FX rates. Supply chain disruptions such as clearance, custom clearance delays, as well as elevated logistic costs, alongside importation costs relating to port handling fees, as well as taxes. These costs are then obviously passed down to consumers, hence the increase in price. As we do approach the festive period, I do anticipate another surge just due to the demand. There's actually been a ban imposed on frozen poultry items, including turkey, by the government. So I do expect us to see an increase in the price again, just due to the fact that our local supply of turkey isn't actually sufficient enough to meet the high demands of that period.
Right, and with many households under income pressure and shifting towards cheaper and healthier protein options, which food commodities stand to gain from this trend?
Well, in order to satisfy their protein intake, I do expect households to switch to alternatives like chicken, fish, eggs, or even more healthier options, like you said, like plant-based options such as beans or even soy-based products.
All right, definitely we'll keep tracking all of that. Festivities upon us now. Thank you so much, Toju Megson, for bringing us up to speed.
Thank you for having me, Leyen.
All right, let's get a check on what's playing out with the markets that we track now. We're still on the African continent. There, the NGX still, moving up. At this point, I guess we're starting that price discovery level again for the NGX All-Share Index, 0.29% up, 146,000. That's intraday. The Johannesburg Stock Exchange, that's the JSE. We talked about the leadership shakeup there. I guess investors might be happy with that. 111,000. That's for the All-Share Index, about 4 basis points intraday. Let's get a check now on other parts of the African continent. We see the EGX 30. 37,000 points, 0.75% up, and the Nairobi Stock Exchange closing in the red. That's for yesterday. Let's get a check now on the Gulf region. That's in the Middle East. You see it's mostly negative sentiment there intraday, 0.17% down. That's for the Dubai Index. Abu Dhabi Index, 6 basis points down. Let's get a check now on Saudi Arabia and Tata Wool. On the flip side, these are in the green. With the Saudi Arabia Tata Wool, they're 0.27% up at intraday. Let's move it on to the U.S. now. S&P 500 futures, they were flat today after the benchmark index rose to an all-time high in the previous session there. But we'll see the tech-heavy NASDAQ, that's looking better, 1.12% up, 23,000. That's for the NASDAQ futures. S&P futures, 0.58% down. But let's get a summary of yesterday's close from our correspondent, Maria Bird.
Stock market was mixed on Wednesday as the Dow Jones was just below flatline, the S&P 500 up almost 0.6%, and the heavy tech NASDAQ up more than 1%, as many investors were hopeful that we could see some positive signs from the Federal Reserve policy meeting. All notes indicate that there could be interest rate cuts in the near future. This makes many hopeful that the economy could be on an upward swing despite the current federal government shutdown.
And we see shares of SoftBank, that paired gains jumped 11.43% today, a day after the Japanese giant announced a deal to buy the robotics division of a Swiss engineering firm, ABB, for about $5.4 billion. So Nikkei, 1.77% close there. Kospi, a bigger 2.70%, 3,549 points. Let's look at the Nifty 50 in India. That's also in the green, 0.54% to close, 25,181 points there. So that's the green picture right there in Asia. Let's get a check now on what's playing out in Europe. See, German Chancellor Friedrich Merz is hosting car makers in Berlin to discuss his country's auto industry's ailing situation. Join us now with more from the German capital. We have DW correspondent Chibona Chibelu. Great to have you, Chip. How crucial is this summit?
Well, this summit is, of course, very crucial today. It is really about the German government being under pressure to act to support the country's auto industry, which has been struggling. Now, several of the sector's big names, including Europe's biggest car maker, Volkswagen, and supplier Bosch, have announced plans to cut thousands of jobs, and that includes thousands of jobs here in Germany. The industry has, of course, been struggling to compete with cheaper competition from China in the EV segment, and it's not, of course, that Chinese rivals have been more innovative, Laddie. It's also that they've been expanding aggressively here in Europe amid a slowdown, and of course also because of overcapacity in their own home market. Now, the Chinese economic downturn has also, of course, been hurting Germany's car makers, because China was once a major export market and revenue generator for them. And the challenges in the auto industry, of course, Laddie, as we know, are indicative of a wider economic challenges that Germany has been facing.
So what measures are the German government planning to, help car makers at this point?
Well, Laddie, Germany's ruling coalition has agreed on incentives worth 3 billion euros for purchases of electric vehicles here in Germany until 2029. We do know that right now there is an oversupply of electric vehicles in the EU, so consumers do need to be incentivized to buy electric vehicles. Now, what we may also see is the German government linking auto industry support to aid for domestic steel makers. The steel making industry has been struggling, so we could see carbon targets for car makers being eased if they use European green steel, which is, of course, domestically produced and more climate friendly than steel that is imported from China. And of course, an EU-wide response may also be something that the German government might look into to keep not just Germany's auto industry competitive, but also Europe's auto industry competitive. There is not enough coordination in lots of areas, including subsidies for buying EVs, which range from nothing in some European countries to, say, as much as 11,000 euros in Italy in some cases. So there might be, of course, more need to coordinate there. We do know that Berlin is also planning to ask the EU to delay the ban on the sale of new internal combustion engine vehicles in the EU beyond the deadline that has been set, which is 2035. And we did, of course, hear from Chancellor Friedrich Merz earlier this week, who said that the idea of that ban is wrong. So we will, of course, be expecting Germany to ask the EU to change that.
I guess we'll keep tracking that, but how competitive is Germany's auto industry?
I mean, we just need to see what does happen with the auto industry going forward. There are people who do believe that there is still potential to save the auto industry. It's not as bad as it is if the right policy adjustments are made strategically in terms of where investments and policies do perhaps encourage the transition to EVs, while of course perhaps buying more time for car makers to make that transition by, for instance, extending the time that they can make that transition by extending that ban on combustion engine vehicles.
All right, we'll keep tracking that summit. Thank you so much, Chipona Chibelu, there for the details of what's playing out in Europe. All right, now let's get a quick check now what's playing out in the crypto market. We see it's pockets of red and green. Bitcoin looking better there, 0.56% up, $123,000, even though we saw that big drop. That was, I think, yesterday or the day before. That's for Bitcoin, dragging a couple of the altcoins there that were trying to get into newer highs at this point. We see Ethereum, $4,400, down a big 1.79%. So we see the altcoins there taking a beating right there, with Bitcoin still holding up in a green. BNB, $1,285 there. That's still on price discovery at this point, still close to the all-time highs, just like gold. At this point, let's get a check now on some of the headlines in the crypto space. We see the United Kingdom, they officially lifted its 4-year ban on crypto exchange traded notes, ETNs, marking a major shift in the country's approach to digital asset investments. The Financial Conduct Authority, that's the FCA, announced that retail investors can now access crypto ETNs through regulated UK exchanges. a decision that reflects growing confidence and the maturity and transparency of the crypto market there. Now we see PayPal, the mobile payments operator controlled by SoftBank, has acquired a 40% equity stake in Binance Japan. The company announced this today, marking another step in Japan's evolving digital asset market. The transaction, whose financial terms were not disclosed, positions PayPal to expand beyond traditional cashless payments into cryptocurrency services, while Binance gains deeper integration into Japan's consumer payments infrastructure. All right, to all stories there. As meme coin season starts to shake up the BNB chain ecosystem, Binance Wallet has taken the opportunity to launch a meme coin platform called Meme Rush, partnering with BNB Meme Coin Launchpad for .meme. The platform is designed to provide more exposure for non-custodial wallet users to discover and actively participate in the meme hype sweeping the chain right there. All right, let's talk to Seun Dania now, his CEO, Alpha Geek Technologies. Hello, Seun. Great to have you on the show.
Adi, good afternoon.
Good afternoon, Seun. So, definitely, it seems 2025 is looking like a year of new highs for a couple of asset classes right now. We've seen that happen for Bitcoin. We've seen that happen for BNB. We've seen that happen for gold. We've seen a lot of indexes, stock market indexes, hitting new highs at this point. But that's all happening alongside gold. How are you seeing all of what's playing out in the markets?
I believe generally people are beginning to show express confidence in investing in commodities and stocks, even we're seeing in the stock market also. People are looking at alternative means of investments. And I think that way, evidently because we see that, of course, the banks are not giving the best interest rates. The Feds have been cutting interest rates, even in the UK. So basically, people are not getting the best from saving in the traditional means, through the banks. So I believe that's why we're seeing sort of all these, investments in other sources.
But going into 2026, there's still all of that uncertainty around rate hikes, in the U.S. and uncertainty about the government shutdown right there. Do you think we're going to see new highs for most of these asset classes in 2026?
Adoption is definitely increasing. In every financial, even banking conversations that are happening now, blockchain stablecoins are evidently one of the top topics. We've seen in the recent news that Swift actually also, building their own blockchain solution in order to solve the challenges of, delayed cross-border payments. That signals to everyone that it is actually here. So this is not a time where we're still trying to speculate or think about if this is going to be. It is going to be. It's already happening. And it's right in front of us. So basically, most of the corporations, countries, businesses are all, and even traditional investors are all looking for ways to ensure that they may be late or may not be late, but it's never late. Everybody's trying to get in now. At least now, everybody has different metrics that they use to measure when to come in, and those signals are beginning to flash before everyone's eyes. So yeah, we're getting a lot more adoption globally.
Yeah. So looking at Bitcoin, for instance, now, where do you see the top for Bitcoin?
So I mean, there have been so many predictions. There have been predictions in the hundreds of thousands. Those prophecies have come through. There have been predictions, prophecies in millions of dollars. Those have also come through. I personally do not have a conviction of where it may be. It will be a store of value at the end of the day. But I still believe that there are so many other forms of digital money, digital assets that will be more usable and more tradable and more accessible to the everyday person. Those are the ones like the stable coin that we're seeing large adoption. Those are the ones that I see will definitely, be in everyday use for everyone. Bitcoin, definitely, we know I believe there will still be like another 5x from where we are.
All right.
Next year.
And talking about another 5x for Bitcoin, the possibility of that. I remember when Bitcoin fell as low as $17,000, $16,000 and started the run up to over $100,000. But if you look at the top 100 coins, on CoinMarketCap, you find out that a lot of these altcoins have not really done much, so far. A couple of investors that are holding some of these altcoins, their portfolios have not really shifted much. But we're seeing new highs for the likes of Bitcoin and BNB. So is this a party that will not involve altcoins, going forward?
Altcoins are centralized. Bitcoin in its own is centralized. And Bitcoin has a finite number. There's a 21 million Bitcoin will only exist. And after that, it will just be all scrambling for, divisions, satoshis. So evidently, Bitcoin has that going for it. BNB, on the other hand, of course, is owned by the biggest cryptocurrency exchange. And people are seeing the work that they are doing, that they're expanding, acquiring, partnering. So that gives a lot of confidence. They're already building a very, very large ecosystem. However, some of the other altcoins are not doing the same thing. People are replicating that same model, which is build an exchange, launch your own token, but they are not building that wide ecosystem. Some are also following suit, have their own custodial wallets, have people use them, but it may not be as big as what BNB is doing. There's a lot of, I think within other blockchains, maybe like Solana, Cardano, they are building, big ecosystems, they're building communities, but it may not be enough to drive their prices up in the long, because everyone who is in crypto is not going to. We have people who are Bitcoin maxis who would only touch Bitcoin and maybe stablecoin, right? But I'm not sure we have people who are diehard loyal fans of the token that's owned by or blockchain that's built by somebody else. I think the mystery behind Bitcoin keeps it very, very, very very unique, and people know that yes, it doesn't belong to one particular company or built by a group of individuals. Ethereum has going for it as the second, the first EVM, and first of all, the smart contracts and a lot of things that can build on the ERC20. We see that's going for it. So you can see that Ethereum is also gaining, some traction. But, most of them may fall off as things go. As more regulation starts to come, when the regulation gets clearer, countries are beginning to decide how and when or who they want to monitor and how they want to actually put in regulation, placing taxes. A lot of the other businesses, I believe they will just weather off after some time. But we never can tell. A lot of things are based on the use cases. If they're able to build their communities, build their own ecosystems, and get people to trust in them to hold those tokens or to exchange those tokens between themselves, then we just might. But I think evidently Bitcoin's in its number is what's going for it.
All right. I guess at this point, I wonder, maybe it's going to be all about Bitcoin at some point, and maybe investors just forget about the altcoin. But we'll keep watching to see how it plays out. Thank you so much, Shehu Dani, as the CEO of Alpha Geek Technologies. Thank you.
Thank you very much, buddy. Have a great day.
All right, so that's how major markets we track looking today, and definitely we'll give you more updates for the TGIF trade tomorrow. Thanks so much for watching. I'm Ladi Williams from the team right here at Channels HQ. Bye for now.